Hello, savvy investors. Welcome back to the Dividend Uncle channel. Today, we're diving into the latest quarterly results for Mapletree Logistics Trust, or MLT. Following our recent discussion about REITs at or below COVID lows, where we touched on Mapletree Logistics Trust, many of you expressed a keen interest in a more detailed analysis. Well, your requests haven't gone unheard, and here's the deep dive you've been waiting for. With the trust share price dropping by 22.4% from its peak in December 2023 and now sitting at around COVID-era lows, there's a lot to unpack. Let's get started. Investor sentiment and market shifts, challenges faced. In recent developments, Mapletree Logistics Trust has not only faced a drop in share price but also seen a noticeable retreat by institutional investors, possibly as part of a broader strategy to decrease their exposure to China-related investments, including Mapletree Logistics Trust, where China accounts for about 20% of its assets. With China experiencing economic difficulties, it's a turbulent time for sectors heavily reliant on its market. Furthermore, I conducted a survey both here on YouTube and on Investing Note to gauge your sentiment about Mapletree Logistics Trust's future performance. A surprising 76% of you expressed optimism, anticipating that Mapletree Logistics Trust will soon outperform other REITs despite the recent downturn. I want to extend a heartfelt thank you to everyone in the community for your active participation. Given the current market pullback, your optimism is notably striking. So, let's delve into the financial details and see if our community's confidence is well placed or if we're missing a piece of the puzzle. A shift in the wind? MLT's first DPU drop signals potential challenges. In the first quarter of 2024, Mapletree Logistics Trust reported a financial performance that carried both signs of resilience and emerging challenges. The trust posted a modest year-over-year increase in gross revenue, reaching 181 million Singapore dollars, a 1.2% rise, while net property income saw a slight uptick of 0.6% to 155.3 million Singapore dollars. These figures reflect Mapletree Logistics Trust's stable operational efficiency and the incremental gains from recent property acquisitions. However, a notable shift occurred in the distribution per unit, DPU, which decreased by 2.5% to 2.211 cents. This marks the first instance of a DPU decline for Mapletree Logistics Trust, a significant turn as the trust had previously managed to incrementally increase its DPU over the quarters, even amidst challenges like rising interest rates. This trend had set Mapletree Logistics Trust apart as one of the few REITs to sustain growth in payouts to investors during economically uncertain times. The shift to a decline in DPU raises important questions. Is this a mere blip caused by temporary market conditions, or are we witnessing a pivotal turning point for Mapletree Logistics Trust? Financial pressures impacting Mapletree Logistics Trust. Mapletree Logistics Trust finds itself grappling with a trio of financial challenges that significantly influence its operational strategy and investor perceptions. 1. Elevated borrowing costs. Interest rate environment. The global financial climate, marked by rising interest rates, has sharply increased Mapletree Logistics Trust's borrowing costs. For Q1 2024, these costs rose by 6.9% year-over-year to 37.217 million Singapore dollars, reflecting the direct impact of the tightening monetary policy globally. Debt profile. With a total debt standing at 5.310 billion Singapore dollars as of the end of March 2024, and an average interest rate of 2.7%, Mapletree Logistics Trust has effectively managed its debt profile. However, even with 84% of its debt as fixed or hedged, new debts or refinancing under current conditions might attract higher rates, amplifying financial strain. 2. Currency depreciation. Currency impact. Operating across diverse markets exposes Mapletree Logistics Trust to currency fluctuations. The recent depreciation of several regional currencies, including the Japanese yen and Chinese yuan, against the Singapore dollar has adversely affected Mapletree Logistics Trust's earnings, and hence distributions, translated back into Singapore dollar. Translation losses. The fiscal year saw significant currency translation losses amounting to 470.9 million Singapore dollars, detrimentally affecting the valuation of Mapletree Logistics Trust's international assets and, by extension, its financial robustness. 3. China's market conditions. Leasing challenges. China's economic deceleration and a cooling demand in the logistics sector have led to a stark -10.0% rental reversion, underscoring the severe market conditions in the region. Looking at these three pressure points, which resulted in a reduction in DPU, this could potentially weaken investor confidence in Mapletree Logistics Trust, as they might seek more lucrative yields elsewhere given the heightened financial pressures. Recognizing the positives amid challenges. While the short-term outlook for Mapletree Logistics Trust, particularly concerning its operations in China, seems daunting, the Trust's management strategies and resilience in the face of adversity could be the key for investors in deciding whether to stay with this blue-chip REIT or to join the fleeing institutional investors. 1. Stable operating performance. High occupancy rate. Mapletree Logistics Trust has impressively maintained a high portfolio occupancy rate of 96.0% despite the challenges. This achievement underscores the effectiveness of its asset management strategies, ensuring that its properties continue to meet the needs of existing tenants while attracting new ones. Positive rental reversions. The Trust reported an overall 2.9% positive rental reversion across its portfolio, including 11.1% rental reversion in Singapore. This indicates the benefits of diversification, that is, the rest of the countries are performing well enough to offset China's decline. Mapletree Logistics Trust's ability to negotiate lease renewals at higher rates reflects the enduring appeal and strategic positioning of its logistics facilities. 2. Proactive portfolio expansion and rejuvenation. Strategic acquisitions. Throughout the year, Mapletree Logistics Trust actively expanded its footprint with acquisitions worth over 1.1 billion Singapore dollars in emerging markets like India, Malaysia, and Vietnam. These regions offer promising growth prospects and higher yields, aligning with Mapletree Logistics Trust's strategy to tap into dynamic economic zones, and allows the portfolio to diversify away from China. Effective capital recycling. Mapletree Logistics Trust divested assets valued at over 200 million Singapore dollars at an average premium of nearly 13% to their book value. This capital recycling strategy not only optimizes the portfolio but also reallocates resources to more profitable investments. 3. Strategic capital management. Interest rate hedging. With 84% of its debt hedged, Mapletree Logistics Trust effectively shields itself against the fluctuations of interest rates, securing stable finance costs even as global rates rise. Currency hedging. The Trust also hedges approximately 78% of its expected income for the next 12 months into Singapore dollars, safeguarding against potential losses from currency depreciation. The Dividend Uncle's take: will I be investing in MLT? As always, it's essential for us as investors to look beyond the immediate challenges and recognize the potential for long-term growth. In my view, Mapletree Logistics Trust is well equipped to navigate future challenges and seize upcoming opportunities in the logistics sector, which will continue to be critical for global trade. Hence, I remain optimistic about Mapletree Logistics Trust's future and will continue to include it in my investment portfolio, looking beyond the current market volatilities to the potential long-term growth that lies ahead. The current downturn in prices represents an attractive opportunity to accumulate this blue-chip REIT for my retirement, but I have to be mentally prepared for short-term fluctuations. Conclusion. As we wrap up, it's clear that Mapletree Logistics Trust faces a complex array of challenges but also holds promising avenues for growth and recovery. The Trust's strategic management actions and commitment to sustainability demonstrate a robust foundation for future success. For long-term investors, understanding these dynamics is crucial in assessing Mapletree Logistics Trust's potential as a resilient player in the logistics real estate sector. Stay tuned for more updates, and as always, keep investing wisely and stay informed. Don't forget to like, subscribe, and share your thoughts in the comments below. Until next time, happy investing.